Thank you for tuning in to another edition of the Vulcan Report. This end of day report is trading on Thursday, March the 1st, 2018. Looking at the Bitcoin futures first, starting that off, you can see on the daily chart, market is facing some pretty strong resistance at this 11,000 level. 12,000 overhead resistance seems to be pretty powerful. Tried it here and failed. Tried it again here and failed. If you switch it over to the weekly chart, you can see that this is the second week now in a row that the market tried to test the first resistance, which is the magenta line here, and had a lot of problems with it. Now the market's trying to gather up some strength and get back up there again, but it's proving to be a very strong resistance level. We'll see what happens. Will the retracement continue? So far, market still has the momentum locked in on its side, and it appears that the market's still in retracement mode off of the lows. Taking a look at the Dow Jones, you can see here the market also struggling within this consolidated area. Truth be told, the real resistance is around 25,477. So far this week, it's hit 25,813. So we have an expansion of the range. Bottom side of the range is at 23,088. So from 23,088 to 25,813 is your trading range in the Dow Jones. That's just how it is right now. The market's gone nowhere. It's just trading within this range, so it makes it look like there's a lot going on in the market more than what it really is. You have not escaped the trading range. The overall long-term complexion of the market is still bullish, but we're experiencing weakness here. All right, lack of conviction on the buy side, and really lack of follow-through on the sell side. Market's just playing around with the trend lines here. That's all you got going on. All right, the support line is where the market's kind of playing around with. You know, you lose momentum, regain it, and then you lose it again. So it's just flip-flopping around. It's really not a lot to see here, but we did have abounding crash alerts in the stock indexes today, and they seem to be playing out because all you're doing is you're racing up and down the range. You're not trending at this point. It's just relaxing, if you will. So we'll see where we go. We got rampage coming up, so something's bound to happen. We're just going to keep watching it, see what happens. Trade what you see. If there's nothing to see, then you don't trade it. And truth be told, system has been mostly flat on the sidelines this week because of it. Taking a look at the NASDAQ, it's having problems at the 7,000 range. It's the NASDAQ 100. All right, so it's having problems as well. It also expanded its range at this point. The true range right now on the NASDAQ, this top side 7,047 and a quarter, and the bottom side is 6,164. So you have a very, very wide trading range in the NASDAQ 100. All right, that's quite a lot, folks. All right, you got almost 1,000 points just in the NASDAQ alone, and it's just chilling in the range. It's not really doing too much. It's just chilling. So you got several hundred points of the market just going up and down, up and down, up and down within this range, making it seem like the market's doing a whole lot more than what it really is. So, oh man, the NASDAQ was down 200 today. And then the next day, oh, the NASDAQ's up 100. It's not doing anything. It's just waffling along. This is the weekly chart. Let me show you what the daily looks like. You can see more. All right, so you're just going up and down, up and down, up and down. And you break out, and then now you come back down and retrace right back to this line right here, the line in the sand, which is your support line. So you come in here, and you come in here. All right, so you're testing the longer-term trend line here. All right, market looked like it was going to crash below the Kumo cloud, and then you just had this V-shaped recovery, which is very commonplace in stock indexes, V-shaped recoveries. All right, instantaneous recovery. And now the market is giving back a little bit, pulling back, getting you more toward that 50% retracement, and now it's going to decide what it wants to do. You're still above the Kumo cloud here. All right, price action still above the cloud, but the trend line right here, longer term trend line, is in the cloud. So very interesting to see how things develop here. On the daily chart, you don't really have that much rampage. You got a little arc coming up here, and then it kind of levels out. And then you got the vortex here, and this right here is around the week of March the 19th. And then you have another one the week of April the 2nd. So we'll see how the markets behave at those points and where we go from there. Your guess is as good as mine. Let's take a look now at gold. All right, looking at gold on the daily chart. You see it's come off at a high of $1,365.40. Fell all the way down to $1,303.60. The shorts have temporary control of this market. Market's been coming down ever since it peaked back there. All right, forming that double top, that head and shoulders pattern. And now the market is deciding what it's going to do from here. Curvature coming down, momentum starting to drag the market down. All right, pulling up the weekly chart. See, we're losing momentum. Came down, tested the trend line support area here. The secondary support down here at 1285.90. So we'll see what happens. You got a little bit of a ramp here. You got serious rampage coming up once we get into July. But between now and then, who knows where this thing is going. But right now, the bears have control of the market temporarily, even though you were in a slightly bullish configuration. You're bearish in the silver still. And again, this market also trading within a range. All right, your top side of the range is $16.95, and your bottom side of the range is around $16.13. So you're playing with about $1 worth of trading range for the last. This is the fourth week in a row that the market is just trading within $1's trading range. All right, no conviction to the downside, no conviction to the top side. The market's just flat, dead in the water. Not much going on. Looking at your gold miners, same thing. Looks just like the silver chart. All right, no conviction either way. But you are dangling over the cliff per se. No conviction. You're just kind of like just hovering there, just dangling. Not falling off, not being pulled up either. Just kind of lifeless. Taking a look here at natural gas. Natural gas has been all over the place on the weekly chart, as you can see. It ran up here and just fell down as quickly as you ran up. And the weather's been a lot warmer, and that could be the reason why you got all the way down here and got into the 250s. 253 was the low, and now here you are at 269. So you broke below the $3 line, and that's a big deal. Now the question is, how low is it going to get? Looking here at crude oil. Crude oil also taking a bit of a breather after running up to $66.65, and it's kind of flat as well. Very wide trading range. Top side 65.40, bottom side 58.02. So you got a $5-6 trading range that the market is just behaving within. All right, you gained momentum here, and so far you're losing it this week. If the market were to close tomorrow at $62.08, if it closes above that, then you have bullish momentum to carry over to the next week. But as it's looking right here, well, you could see some more selling picking up tomorrow and leading us into next week as well. Looking here at bonds now. Bonds are in a bear market. It's official. Any kind of bear market rally is going to be met with selling. So far, the market's trying to get above 144.28. If it's successful and does that tomorrow, then it's put in a short-term bottom at 142.04, and the first top-side target is 148.28 as far as profit taking, where the market will be met with more selling. So between 146 and 148.28, that's where you'll see sellers start to re-enter into this market. All right, let's take a look here at also GBTC. All right, topped out at 38.71, and there you go. Trying to maintain that bullish momentum. A close tomorrow above $17.50 will carry over more buying into next week. And you got Mad Rampage coming up here, so this one's looking interesting as well. Taking a look at BTCS, still holding steady. Right now it's at 8 cents. All right, so you're waffling around the support between 8 and 9 cents. And it's just holding steady there. You got below this cloud now. Missed the opportunity for that rampage coming up to here. And now you're getting not too far away from the week of the vortex of April the 9th. Could help to pull prices back up and put in a bottom here and have this market to finally move. We'll see what happens. Taking a look now at the US dollar. All right, US dollar is still in retracement mode. Got up to 90.93, and I do believe I told you between 89 and 91 is where they want to try to keep this. And right now, if it closes above 89.79 tomorrow, then you have more buying opening the door for next week because you maintain bullish momentum. And right now, your top side overhead resistance is at 91.42, so it's probably gonna, come close to somewhere around there. Even if it rolls over again once it hits it, that's the initial target. But it could gain more momentum topside and test that 93.84 trend line resistance up here. So this is going to be an interesting one to watch as well. Taking a look at Hack. All right, Hack pulled back a little bit today. All right, 33.90. Still above $30 though. So the configuration is still bullish. Market's still bullish. Just taking a little bit of a breather. If it closes above $33.49 tomorrow, then it still has bullish momentum to carry over into next week. And that's where we are on that one. Really not a whole lot going on this week. Just a lot of range-bound price action. That's about it. All right, so let's see what happens tomorrow. Tomorrow should be rather interesting. And remember, pulsewavetrading.com, you can come and learn how to trade the AI, all right? Learn how the AI works. Learn how the world that we live in is changing and being handed over to more and more AI programs. The markets are no different. The markets are run by AI. Everything is AI. If you don't have AI on your side, then you will become a victim of AI. The old traditional ways of doing things do not work anymore. You got to have the AI. You got to know what you don't know. Come learn what the central banks don't want you to know at pulsewavetrading.com. 7-day free trial. Included in your subscription is the free study course, along with tons of information that the government doesn't want you to know. Come find out. pulsewavetrading.com. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can, do nothing back. Peace.